Good morning from Toronto, traders. It's 9 a.m. Eastern U.S. time on the 7th of September 2021. It is Tuesday, the day after Labor Day. We were off yesterday. First things first, a quick mic check just to let me know where I stand in terms of sound. This is episode number 2076. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, what do we have today? A quick jump into the Convergent Trading pre-market summary sheet this morning shows a mixed market, a mixed risk posture overnight. We have the indices mixed in themselves. The Russell's hanging on to 6 ticks from settlement, and the S&P is up 75 or one point from settlement. Not much going on. Crude is pulling back from the $70 mark down $1.10, and the 10-year, 30-year, and the Eurobond are also off. We see the metals are off, the dollar strengthening. So that's where that stands. Let me turn down my news feed here. These guys are speaking over each other. Couple things to note this week. We did get the German zoo figure this morning, but for the rest of the week, we have the inflation rate out of China tomorrow at 9:30 p.m. We have balanced trade out of Germany. These are the key figures of the week. Crude oil inventories are going to come in on Thursday because of the Monday holiday. Thursday, we have 11 a.m. crude oil inventories. Couple of Fed speakers. Thursday, we also get the ECB interest rate decision and the press conference. The press conference is 8:30 Eastern AM. And then Friday, we get balanced trade out of Great Britain, PPI, month on month out of the U.S. Wholesale inventories also on Friday. So not too busy a week. It's a short week here in the US and in Canada. And if we look at the earnings, not much pre-market. We get Casey's General after the close today. This is a retail stock. Main concerns, looking forward to ECB's meeting on Thursday. Nothing spectacular expected there, probably remaining accommodative. COVID numbers are being attributed to the poor performance in August for the employment numbers. And then today we're getting the Japan current account balance for July at 7:50 p.m. GDP growth Q on Q final at 7:50 p.m. and U.S. total vehicle sales at 8 p.m. The S&P is currently balanced. It is actually creating a multi-distribution. It was balanced for most of the session. A lot of volume going across here at these prices. In fact, the point of control is shifted down. Point of control was at 45.39, currently 45.33.5. The volume is okay at 147,000 contracts, and the overnight inventory is 37% long compared to Friday. Actually, the holiday's throwing things off. What I've done is I've eliminated yesterday's action from the cash open, the normal cash open, until the session closed. So yesterday's day session does not count. I just simply remove it from my charts. The volume is so low, it doesn't really matter to me. So my numbers might be slightly different than yours. One of the things you'll need to remember is that the U.S. index futures roll starting at 9:30 a.m. Eastern on Thursday. I might do what I did last month, which is to hang on to the September contract until Friday and then roll on Friday at the end of Friday. just to keep things constant for a little bit longer. Generally, IQ feed, which is the data feed, historical data feed that I use, will roll with the exchange. The official roll is at 9:30 a.m. Eastern on Thursday. We'll start monitoring the pace of the roll at that point, and we expect the roll to be in effect, in full effect, until the following Wednesday, which would be the 15th of September, and then expiration, quad witching Friday will be the 17th of September. Quad witching, we will be rolling US indices from September to December. That's the Z contract, Z or Z for you Brits. And that's where we're headed. So a little bit going on this week that you should be aware of. Note that the rotational figures, these rotational figures have been shrinking and shrinking and shrinking, or reducing. Rotations have been falling. The volatility has been falling. Also, the ranges have been falling from week to week. The ES and the NQ stayed the same, but the RTY, YM, and CL ranges based on 252 days of data have been falling. And so overall, the volatility is falling off quite rapidly when it comes to rotations. It wasn't a month ago when we were at 5 points in terms of harmonic rotations. The harmonic rotations are based on 1 minute bars going back 20 sessions, about 700 or so rotations in that statistic. It's a high confidence statistic. The rotations describe the normal ebb and flow, or the normal back and forth of the particular product. So the S&P at 4.25 points, that's what we would consider to be the normal ebb and flow, or the noise range for that product. So if your stop is within that range, you need to be closer to the edges. You need to be more precise. So that's where that stands. Looking at Friday, this is Friday's Trader Bite. Looking at Friday, the primary expectation is we would likely push into the 40, outlined here, push into the 40 and fall off in the afternoon. That was the main expectation for Friday. We expect a small probe down from where we open. We expect it to open at in the 45, 28, 29 area. We expect it to fall off a little bit and work itself to 40 before coming off back into the middle of the range for Friday. Here's what took place on Friday on the clean chart in our review segment. Sorry, no camera this week as I'm on my laptop. Here's what took place. We ended up opening down here 23. We ended up dropping a little bit between the Trader Bite and the open. We dropped a little bit. We pushed into 31.75. We see a clear and clean opening swing high. We see a clear and clean opening swing low. So we see the first sellers come in at 31.75. We see the first buyers come in at 21.25. Those are the key turning points. And then we end up in the middle. We poke through the opening swing low, and then we have our first impulse up of the day. First impulse up, looking for a long. And where are we looking for the long in terms of a key target? What are we looking for? We're looking for the 40. There's the 40 right at the top. Remember, the 40 to 45 range was expected to be key resistance above. Okay, and so we push into the 40 and we come off back into the close. So pretty much on point, but this gobbledygook here in the middle, just chopping back and forth on Friday, obscured some of the intent. The key element on Friday is the impulse was to the positive side. Look for a pullback to get long. Target the 40. There was a lot of heat. As a result, here it pulled back to 25 before continuing to 40, but overall it matched the primary scenario and the expectation. The expectation was we would test this point of control up here and the key resistance that was generated the prior session. Since, by the way, Friday closed well ahead of its open. See, the open is down here, the close is up there. I believe the settlement was 45.34 and a half. Even though there's quite a bit of price difference here, the delta was just not with us. The delta just finished flat on Friday. The delta at these all-time highs has in fact been quite difficult to read, relatively deceptive, mainly because, futures are a hedge instrument, and there's a lot of money that's being made in the equities, and so we may be getting the opposite effect or the opposite aggression in futures. Here's what we've got since Friday. So we open up on Sunday right in here. We test down, we continue, we retest again that 40 right here, and we continue higher. We put in this point of control that is really, really high flagging, really up high. And then in here, I eliminated the section where the day session traded between 9:30 Eastern and 1:30 Eastern yesterday. And we just continue in the same session. This entire thing since Sunday is considered one session, even though it crosses in between days. Technically speaking, the exchange considers today's session a continuation of Sunday night's open or Monday session. So this entire play here, even though we're only taking the most recent point of control, the actual figures for today's action are the combination is this profile that I just put on here. So let's highlight it. Let's make it volume shaded. So this is basically the action from yesterday. Three prongs. The upper distribution that was put in on Sunday night, middle distribution that was put in today's session or last night's session, and the lower distribution, which is now the point of control. We have clear low volume nodes in between them. There's a lot of price discovery occurring between 45.31 and 45.45. So this is where we kind of need to keep our minds straight around these facts as we trade today's action. These holidays tend to throw a wrench in things. 1 second. So as we look at the overnight session, what we have is a market that has tested up, right? Hasn't really taken out the non-farm payroll high at 45.49.50, made a lower high and is testing down, and it's stuck in the lower end of the range. We are below VWAP, we are below mid. We have a point of control right in this area, and we are right back in Friday's profile. We're inside of Thursday's profile. We're around Wednesday's profile. We're just above Tuesday's profile. We're inside of Monday's profile. So we are just in a huge balance zone that if we extended this profile back, let's bring this profile back to incorporate what we have done this whole last week. You can see how fat that profile is getting. Takes a while. Yep, this laptop has a hard time keeping up despite the power that it comes with. It really doesn't compare to a desktop machine. So point of control is 45.27. That's basically the POC of last week, which is beneath us. So we have a lot going on in this 40, 45 zone. Okay, there's still the 40-45 that I drew on Friday is still in play, and we remain underneath it. So every time we push up, there's a tendency for us to come off fairly rapidly. That's the review segment. Looking at the composite for the week, this is what we accomplished last week. We ended up putting in a lower high on Friday, breaking the one-time framing up which was established the prior Friday. But overall, we have a higher high, higher low on the weekly. Decent volume last week compared to the prior week, 4.09 million in a day session versus 3.88. And we are just not stepping away. We continue to not step away from all-time highs. So to me, structured trades looking for longs on excess lows. In other words, market moves lower, pulls back, puts in a higher low, gets an impulse higher, looking for a long on that impulse, and so on and so forth. So not much more to share here. Let's take a look at what's expected for today so you all can run off and prepare for today's session. Let me fix this chart here a minute. Again, I'll be in Canada all week this week, visiting family. Hadn't seen my family for about 2 years because the borders were closed due to COVID. Finally catching up, so there's just a lot packed in this week. So half days for me this week as I prioritize family, but of course I wouldn't want to miss the open of the market. Here's where we are today. Nah, they're doing what they got to do. We're opening on top of the point of control, below the mid VWAP of the overnight session. The expectation this morning, open auction. Remember, we're opening in range in value of Friday open auction, looking for a dip, consolidate, and then I'm looking for it to try to push the 40 again. This is the 40. This is Friday's high. Try to push the 40 again, consolidate. I expect it to poke through, consolidate, and hold steady sideways from there. I don't expect it to accelerate through the 40 to 45 zone. The 40 to 45 zone is still in play here. All-time high made in Globex at 49.50. We have the mid-century figure above us. Mondays have been, the first days of the week have been surprisingly more active than we would expect. But today I'm expecting it to be relatively sideways. Secondary, an open auction that makes an attempt to push higher, gets tangled in VWAP or the mid. Impulses down, looking for an impulse down. Impulses down back into the overnight point of control to the POC. And the open consolidates and then starts to squeeze lower towards the low of Friday, looking for it to test this 20 zone once again. I'm really not expecting very much here before it consolidates, comes back and holds the middle. Another rest day. There's a lot going on, as you saw in the composite, a lot going on in the 27 right here. So this is expected to be kind of a sit around and chop around kind of environment until we have a catalyst to push highs. This is the way I'm looking for the market today. I'm not looking to commit strong in any direction today. So just to be mindful of your losses. Just stick to your plan. Good luck today, and I'll catch you tomorrow morning. Take care.